Hello everyone and welcome to Calculating the Annual Percentage Rates of ETFs. I'm your host, Dr. B. As I'm recording this for episode number 12, January 24, 2025, it is a balmy 47 degrees on Florida's Gulf Coast, but it feels like 40 degrees. It is 35 degrees in Dallas, Texas. It is 18 degrees in Philadelphia. And in Minneapolis, Minnesota, it is 0 degrees. Now, I am not a weatherman by trade, nor do I want to be. However, when it comes to investments, sometimes you have to think outside the box and change up after a while. So, if you're ever concerned about being hacked by people who are calling you, trying to get your information, well, there is a cybersecurity for that. Or an ETF, we should say. And it's the Amplify Cybersecurity ETF called HACK, H-A-C-K. Now, what is this cybersecurity? Under normal circumstances, this fund invests in about 80% of its net assets plus borrowing for investment purposes in companies actively involved in providing cybersecurity technology and services. In accordance with the ISE Cybersecurity Industry Classification. The index will consist of a selection of constituents in the NASDAQ ISE Cybersecurity Index, the parent index. This fund is non-diversified. Now, in cybersecurity, ISE stands for Identity Services Engine, which is a network access control and policy enforcement platform developed by Cisco that allows organizations to manage and control who and what devices can access their network based on predefined security policies, essentially acting as a gatekeeper to monitor and regulate network access based on user identity and device characteristics. So let's take a look at this wonderful ETF. Not sure if it's so wonderful, but if you invested $10,000 10 years ago, your $10,000 today would be worth $30,195. It only pays an annual yield of 0.14%. This is a growth ETF. It's a medium growth ETF. It has an expense ratio of 0.60%. Now, that might be high, but in its category of ETF operations, it is 0.92%. That's the category. So this annual expense ratio is a little bit lower than the category itself. However, it has a high turnover percentage of 71%. What else do we need to know here? It's compounded biannually twice a year at the end of June and at the end of December. Currently, the investment has a year-to-date value of 2.64%, or is paying 2.64%. Last year, it paid about 23.5%. So what else can we tell you about this? Let's take a look at the exposure. And we can see here it's only exposed into two sectors. Technology, 86.8%, and industrials, 13.2%. So we'll get back to that a little bit later on at the end of the video about the technology and industry breakdown. For more information, you can check out the URL below, and then you can check this stock out yourself on Morningstar.com, or ETF, I should say, because again, we don't profile stocks here at all. But I might mention a couple stocks at the end of this video for informational purposes only. Now, where are we investing here? The United States, 93.6%. Israel, 3.6%. And Japan, 2.8%. And you can see what the category is doing as far as cybersecurity, where they're investing. Now, let's take a look at the breakdown here. HACK has only 25 equity holdings. So I'm going to show you all 25 equity holdings, but I'm not going to go over all 25 equity holdings. You can do that on your own. Okay, number one here is 13%. It's Broadcom. And then number 2 at 7%, it's Cisco Systems. You might have seen or heard of a lot of these right here, such as CrowdStrike. If you're into technology, you've heard of all these names. You can see Broadcom has 117% annual return. But if we look here at Northrop, at 5th on the list here, that only has a 3.49% return. You don't only want to just look at return, you want to look at the forward PE. You don't want to invest something that has a high PE ratio because it may be a weak stock. You never know. Cloudflare has 140 price per earnings ratio. That's a lot. Let's take a look at the next set of holdings, numbers 11 through 20. I'm not going to go over these. You can look at them on your own. These are companies I never heard of personally. Okta might be invested. Oh, it says US dollar. But Trend Micro, that's in Japan. And then the final ones here, we're going to go over a couple of these. Qualys, Sentinel-1, Rapid7, Fastly, A10. So all I want to do is I want to go over 2 of these right now. The first one I want to go over is Sentinel-1. And the reason why I want to go over this is in the past year, it had a minus 9% return, but it has a higher forward PE ratio of 137. So let's take a look at this stock right here. Again, I don't usually go over stocks, but you can see here in the past 5 years, it was up in 2021, but in 2022, it went down and has not recovered at all. So this is one reason why I don't own individual stocks. Even though it has a market cap of about $7 billion, at this point in my life, I don't want to own individual stocks. Let's take a look at Fastly Incorporated. This also was up in 2020 and a little bit in 2021, but in 2021 it started going down slowly and it has never recovered since. So again, this is why I don't own individual stocks. It has a market cap of about $1.3 billion, but these 2 ETFs are being held back. So maybe it'll be better off if this ETF had more money in cash. Is there a limit on how much cash an ETF can have? And the answer is no. ETFs do not have a strict limit on the amount of cash it can hold, but it's generally expected to maintain a relatively low cash level, sometimes around 1%. And to use this to closely track the underlying index, it is designed to replicate. Most of its assets should be invested in the securities that it makes up the index, such as the 25 that I showed you earlier. But maybe here's a case where Hack should dump a couple of these stocks and put money into cash. Again, cash is still paying about 4%, and cash is king. So let's go ahead and take a look at the breakdown. How do we get to $30,195? Well, how do we figure out what's going to be the annual percentage rate? So again, if you looked at my former videos, back in the past, you know what the breakdown is, how I do this, and I go through the steps with you. So in this case, here's your initial step, your initial $10,000 invested. It's compounded twice a year, so 2 times 10 years we're going to profile, that's 20, that's why you have an exponent of 20. That's going to equal 30,195. So your step number 2 is you're going to have to divide 10,000 into 30,195, and then you get a decimal of 3.0195. And then if you're with me previously, and you should have been, then the step number 3 is you apply the natural log to both sides. And then step number 4 is in the natural log, the characteristic is you take the exponent of 20, and that now becomes a multiplier. So you have 20 times the natural log of 1 plus r over 2. And if you take a calculator, the natural log of 3.0195 comes out to be 1.10509. Now, how many decimal places do you round to? Usually about 4 or 5. So since you have a 9 in the 5th decimal place, I like to keep that 9 personally. And then step number 5, you're going to use division property of equality. You're you're going to divide this decimal by 20, and you're going to get a much smaller decimal of 0.05525. Once again, I ran it to 5 decimal places. And then we want to get rid of our natural log, so we do that with the natural exponent. So our expression, the natural log of 1 plus r over 2, now becomes an exponent, and our decimal of 0.05525, that becomes a decimal. So since you're taking 0 over e to the power of a little bit more than 0, then e to the power a little bit more than 0 is going to be a little bit more than 1. So the e and the natural log cancel each other out. So 1 plus your rate divided by 2 is equal to 1.0568. And then simple math here, you want to subtract 1 from your decimal, and then you get a much smaller decimal of 0.0568. That's equal to the rate divided by 2. And then since you have that as a fraction, to get rid of the fraction, you multiply by your denominator of 2. And then you get a rate equal to 0.1136. And to turn that rate into a percentage, you multiply by 100. And there you have it. Your rate is actually 11.36%. Your annual percentage rate is 11.36% over a 10-year period. So that's pretty good. But again, do I own this? The answer is yes, I do. But it's managed by my certified financial planner. This is something that I would not own by myself. Although at one time I did when I had this in one of my funds, but I got rid of it. And then my financial advisor decided she thinks it's something that we should own. So we do this. But is it something that I always want to have? Well, past performance, again, does not equal future results. So let's compare this now into one of my favorite ETFs, XLK, the technology sector ETF. So again, do not go by what you see up here in red where it says $230.81. Although I can look right now on my handy dandy calculator, or I should say my iPhone. I do have an iPhone. And currently as we speak, XLK is really $240 a share. So why does it say $230? That's probably where I had the cursor when I copied this information, which I got from Yahoo Finance. Again, a lot of information I get from Yahoo Finance, but most of my information I get is from Morningstar.com. So actually, XLK is priced at $240 a share. Regardless, over the past 5 years, in red, XLK has earned 153%, whereas Hack has earned 84.73%. So you can see a big gap between XLK and Hack. So I do recommend XLK. If you want to own Hack to be more diversified, then go ahead and do it. But again, consult a certified financial planner to see what's best for your finances. Thank you again for watching my video. Hope you learned something, and please make comments. I do answer comments in a timely manner. And if you don't remember what XLK is doing, or the research I did on XLK, then you go back and check out this video. Take care, and I'll see you again in a couple of weeks.